What's going on, everybody? It's your boy C-Zar, and we are talking about Bitcoin today on this, the 29th of March. We have about 9 hours left in the day, 8 hours, 56 minutes left. Here we are at about $82,500, down 2.2% on the day so far. Hit that like button, you guys. Subscribe if you want to see more content like this, and let's get into it, all right? Others here is down. This is the average crypto kind of index, right? This is your altcoin index, down 3.6% today versus Bitcoin's 2.2%. That's not too bad at all. I do assume that we are going to go lower, and we've done a rather significant move as of now today. What I will say is I know that I and a lot of people probably yesterday were looking at this line right here, and I wasn't expecting it to hold support, right? I was definitely not expecting that this line would hold support during yesterday's video. I did think that we might get a little bit of volatility and see something that comes back up to these areas of prior support for resistance, but we didn't even get that. We just went down, man. So if you notice here on the 4-hour time frame, with these moves down, you had a little bit of a pickup in volume each time, a little bit of a pickup in volume here. There's no volume with this move here. So again, talking about volatility, don't be surprised. We're at 82.5k. Don't be surprised if we do come back up. I don't know. It's not so common to find support on the third attempt, right? Maybe if you do, it's very short-lived, right? The first attempt, the second attempt, and the third attempt. That's what we were talking about yesterday. These diagonal lines aren't really respected, especially in the near term. They're just there to mess with you and give you hope and give people false or bad ideas as to why it should bounce from here. But what we might do instead, what's a very common thing to do instead of bouncing off of this area and going higher on the third attempt, is that when you break through it, you pull back and you back test it for resistance. So if we do pull back to about 84k, I don't want to see anybody celebrating, right? That doesn't mean that we've done anything impressive. In fact, to do something impressive, you basically need to close a day above this day here. That's what you need to do. You need to close a day above like $88,000, $89,000. If you can't do that, then don't get excited about anything that's going to the upside, because you very well could just be going back to prior areas of support for resistance, which I doubt. I thought you were going to do that already, but with this move down, I think that's off the table right now. More so, probably something around 84k or so, and then you'll be going lower. Is my thoughts. If we're looking at this on a RSI basis, you are in the oversold zone. Okay. We've seen this before where you get into the oversold zone and you persist lower, right? Here, whenever you were oversold, you first got oversold. Was this the end of it? No, you kept going down, but you did see a little volatility in between each one, right? Here we might be doing that same kind of thing, just like stair-stepping our way down to finish this off. I do think that over the coming days, we will see resolution. I think that by April 2nd, if not on April 2nd, we will see resolution to the downside, and that will be somewhere around 70k to 74k. I'm thinking 72 to 71k specifically. That's the target area. And what we've done here, my friends, if we look at this, is we've broken through a very key fib area here. On a high to a low, you've been very productive on this fib. On this Fibonacci retracement, you've been very productive. On a 4-hour basis, if we look at it, it's a little bit more obvious. You found resistance at the 382, support at the 236. Very classic, very productive. Resistance at the 0.5, higher highs here to the next fib up, nice. You found support not at the 382, which is a little unconventional, but it's fine. Still a higher low, productive. Next high was at the next fib, right? 382.5618. You're being productive. Now you're finding support at the 382, stepping up. This is like bullish steps up. And then you went all the way up to the golden ratio. And what did you do? You found a double top here. It's the first sign of not being productive. Okay, now you've completed the next sign, and right now, it's, to me, this is very compelling evidence that we are in fact going to go below here. It was never a guess, in my opinion, right? The statistics, the probability has always been to the downside, but with the break of this yellow line here, or even just the simple move through it, which we've done right now, that adds to the probability that we're going below this low, that we're going to see prices down in the area that we've been expecting for a little while now. It just adds to that probability. So I do think that we're going to go a little bit lower. If you're not on board with that, if you're still bullish and you're thinking that I'm crazy, that's fine. I think you're in denial, but it's not certifiable. You're certifiably in denial if we close below about $80,600 on a daily basis, $80,500. If we close below there, you're in denial at that point if you're still bullish, because we are absolutely, anytime you break through the 236, you tend to see an extension based off of this move. And where do these extensions take us? Well, if we take a low to high here, low here to this high, the extensions would be at 73.5k, 69.8k, and everything and anything in between. I really do think that we're going to go right below 72k, but I think we will maintain prices above $71,000. That's my expectation. Moving down here with a little bit less volume gives me the perspective, the perceived possibility that we could move up a little bit. But again, 84k, maybe 85k, you know, something around there. Prior areas of resistance, prior areas of support. 4-hour time frame is at an area where it has bounced before. Doesn't mean that it has to bounce now, but you bounced here before, you bounced here right there, even right there momentarily, a little bit above it there, kind of in this area, kind of in this area, kind of in this area, right? It seems to be a common theme. But you can go lower. We've definitely seen plenty of instances where you went a little bit lower. So don't count on that to happen, and don't count on it to be significant. I'm just more saying that so that if it does happen, when it does happen, people don't get excited because the day is starting to look neutral to some degree, or like it has a wick to the downside. We're still going lower. The 382 to me is that's very compelling evidence. The likelihood just went up a whole lot today, you guys. If we're looking at this, we're looking at it through a daily time frame. Sure, let's do that on the RSI. Higher highs in the RSI. You can see it here, high here, higher high here, right? High here, lower high here, lower high here. It's just lower highs with higher highs. It's called hidden bearish divergence. We're clearly breaking out of this upward sloping channel that we were in, this little consolidation phase from this overall downtrend. And I think that what we're going to see overall is, again, the extension based off of this low to high, and then also it would probably be a very similar area to this low to high extension area as well. The 1272s line up well. The 1618s line up well. 69, 74k, somewhere in that zone. Again, 71 to 72 is the ideal area. Now, I expect this to happen over the coming days. I do think that Saturday, Sunday, Monday, and maybe even going into Tuesday, Wednesday, we are going to drop, right? It's going to be, we went over this yesterday, every single drop that we've had since the all-time high here. If you measure this drop, right, from the, not from the all-time high, but from the relative high here to where you found this relative low, even this small drop, that was a 1, 2, 3, 4-day process, right? From this high here to the drop, that was a 1, 2, 3-day process, or a 4-day process, including this day here. From this drop here, from that high to the drop there, that's a 1, 2, 3, 4, 5, 6, 7, 8-day process, right? Including the day that we began, it's an 8-day process, but going on from that day, it's a 7-day process, so like a week or so. Going on from this day, it'd be like a week or so. A week from March 28th would put us on, I think it's Thursday or Friday of next week. So we're either going to find resolution of this low. I'm just talking about this because this is how long this one right here, 1, 2, 3, 4, 5 days. On the 6th day you found your low. So if we took this out, 1, 2, 3, 4 days was the minimum that we saw. 5, 6, 7, 8 days was the maximum that we saw. That puts us out between Monday, the beginning of next week, to Friday, toward the end of next week. Sometime next week, you guys, we're going to find resolution of this area. And I don't know if you've noticed, if you paid attention to how all these drops have worked, but at the lows, you get a big wick. At the lows, you get a big wick. At the lows, it's a big old wick. And this one did not wick hard, but it candlesticked hard, didn't it? So I'm assuming that while, yes, next week will be a bit bearish to the downside, I wouldn't be surprised if it actually closed green, if it actually closed somewhat neutral, if there was height, fear and panic and pandemonium at the lows, and then once the dust settles, maybe over the weekend, we'll start to move up. Oh yeah. Oh yeah, we're gonna call for that. Yeah. Yep, that's what's happening. You are going to find your low. No, is that what would happen? You're gonna find your low during the week, during the open business week, during the stock week, and then you're gonna move up over the weekend, creating a CME gap to the downside, feeding the bears, feeding the bearish belief that we have to fill that CME gap, even though we don't have to and we won't fill it. Watch it happen. Watch, I'm calling it right now. I've got my crystal ball out. This time it's real. I actually can see into the future. I'm rubbing my crystal ball right now, rubbing that shiny ball, and it's telling me that in the future what's going to happen is sometime next week we're going to find our low, and then sometime next weekend on the end of Friday, whenever the stock market's closed, going into Saturday, Sunday, and early Monday when the stock market is still closed, we're going to see a move up, a nice recovery to end the week. And guess what? The next week that opens, that following week, which will be on April 7th and beyond, we're going to have a CME gap to the downside. And everybody and their mother is going to know that we fill the CME gaps. We're going to go down. You think that we're bullish? No, we're not going to fall for it this time. We fell for it the last couple of times. No, we're not going to go up. We have to fill the CME gap. And I bet we don't fill that gap. Or if we fill that gap, that's it, and then we go to the upside. But I doubt that we fill that gap. I don't know. Anybody out there who's thinking that we have to fill CME gaps, let's educate you real quick, okay? Bitcoin futures, right? Is that yeah, BTC futures. There you go. CME. So on a daily basis, right, this gap from a low point, it got filled. It absolutely did. But if we're looking down here, You guys know what gaps are, right? It's like where the closing price here is one day, and then the opening price of the next day, it creates a gap, closing to opening price. Well, here we had a closing price right here. That actually does fill that gap pretty well. Here you had a closing price right there, closing price, and the opening price is here. You didn't fill that gap entirely, did you? It got partially filled, but not fully filled. This one down here, if we look at this, you closed here and then you opened up here. There's a gap right there, literally a gap right down there at 54.5 to 53.7k. Never got filled. If we keep going down the line, let's keep going down the line. There's a gap, I mean a little bit of a gap right there, but we don't have to count that. There's a gap down here that didn't get filled all the way down at 40k. There's a gap down where there's probably more gaps too. Wait, hold on. Wasn't there more? Oh yeah, right here at a closing point, there's a gap there that didn't get filled. If we continue to look, there's a gap there, there's a gap there. Gap City, baby. Only really in these bigger moves whenever we start. Look at that gap down there that we didn't fill. Look at this gap that didn't fill. Look at that gap that did not fill there. Gap on gap on gap. And all of these happening right in the very beginnings of the week. Monday there. This one here was a Monday gap right there. And then Tuesday you even gapped as well. I'm just saying the notion that you have to fill gaps has really, I think, been put into the mind of people lately, because I know that every time we get a CME gap, it seems over the past month people have been talking about it. And maybe we do. Maybe whenever we find our low down here, whatever, 72, 73k, 71k, whatever it is, whatever we find our low down here, maybe we do get a gap and maybe we fill it and then we continue to run. But I don't think it's going to promote any bearishness, severe bearishness, and I do expect that Bitcoin, not necessarily this next week, but the week of the 7th and on. I think April's going to be a good month, and I think May will be a good month, and June by default will also be a good month. And we'll get into that. Anybody who's saying sell in May and go away for Bitcoin, I encourage you during the bull markets to go look at every May that we've ever had, and you'll find that actually the majority of them, it's not a good time to sell. It's actually like sell in June and go away is a better time. But I'm digressing at this point, guys. I don't really have anything else that I want to say. We're coming up on the end of the month here. End of the month is to start the week next week here. So we got a couple days left. This day is about to close down. It wouldn't surprise me if we saw a little volatility on the way up, because again, we started moving down here today without as much volume. You can see it clear as day. Not a lot of volume here on this move down. So a little bit of volatility should be expected, I suppose. Higher lows here, lower lows here. That's bullish divergence. The divergence formed all the way up and over here. Come on, I say all the way, it's not that far. 83.7k. I bet we do move up to 84k before proceeding lower. But if I'm wrong, don't forget, the main part of the plan on our itinerary here is not to go up and then down and then up and then down and then up. Like, who cares how it looks? That's not what I'm calling for. I'm just calling for the price to go to 72k, 71k. That's the area, right? And we might make it there, we might not, but it's looking pretty damn convincing at this point. The bull market's still on. I'm not one of those guys. I think the bull market is still in full effect. We are going to see new all-time highs. Probably, if not by the end of April, definitely sometime in May and going into June. It's going to be a phenomenal time, you guys. This is the best time probably to buy throughout the whole damn range. But if you wait a couple days, if you wait just like a couple days, you guys, we're probably going to be below these lows here with an even more opportunistic moment to buy Bitcoin and various cryptos. I don't have anything else that I want to say, so hit the like button, subscribe if you want to see more content like this. Thank you all for being here. And most importantly, remember, none of this video, me talking about the price going down, none of it is me saying that you should sell. And not financial advice, not a financial advisor. Do whatever you want. None of this is me saying that you should sell, though. If anything, it's me saying hold off to buy more. Hold off to buy more. Don't sell. I'm not selling anything. I'm not selling anything, because what if I'm wrong? What if the price moves up tomorrow? What if it just snaps back? What if, even though the charts all make sense of lower prices, the powers that be don't care and they want to buy it all up and send this thing through the roof, right? And count on everybody being bearish, right? At the most bearish moments. Don't sell. Not financial advice, not a financial advisor, but you don't sell in a bull market. You sell at the end of the bull market, ideally, or the beginning of the bear market, ideally. But we'll see how it goes, guys. I've got nothing else for you. Hit the like button, subscribe. Thank you all for being here. Bye-bye.